Uber shares are up 53% year to date in 2025. Of course, I'm happy about that. I've been talking about how I thought Uber is the best stock to buy this year ever since January 1st. So I'm happy to see that this stock is up almost 53% year to date, far exceeding the returns of the S&P 500 index. Also, I own Uber stock in my own portfolio, so I'm happy in the increase in wealth I've generated as a result of owning Uber stock. So, a lot of investors are asking me about this business because they know how bullish I am about this company. And so, I wanted to elaborate on the latest developments and what it could mean for Uber stock investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, Uber CEO Dara Kashkari elaborated on the company's latest developments, and I will say that Uber CEO is one of the best CEOs in the market right now that I'm evaluating. I would rate Uber CEO up there along the lines with Starbucks' new CEO Brian Niccol, Amazon CEO Andy Jassy, who I've thought has done a great job at the company since taking over from Jeff Bezos. These are just a few of the CEOs that I see running companies that I see doing a great job in dealing with the situation they've been dealt and improving from the situation they took over from. So the CEO here saying that in the most recently completed quarter, trips grew by 22% year over year, marking their fastest growth since 2023. Both lines of our business accelerated, with mobility trips increasing 21%, far above their expectations, and the top line strength was fueled by record audience and engagement. This is difficult to achieve. When you have new customers, 17% year over year growth in new customers, it makes it more difficult to increase engagement overall because those new customers that are joining your company are not utilizing your company's services as much as customers that have been around for a couple of years, right? And that's no different for any business. When you get a new customer, when I get a new subscriber, that subscriber is maybe watching one of my videos every day, but someone that's been with me since 2022 when I started my channel is probably watching, all four of the videos that I publish on average every day. But a newer subscriber is still getting used to the way I'm analyzing companies and learning about how I evaluate and my framework for evaluating stocks and slowly realizing the benefits of the way I analyze stocks and the way I present my investment research. And it's similar with Uber here, but they're also experiencing a 4% increase in engagement, even though they're attracting so many new customers. So new customers are coming in with a lower level of engagement, while legacy cohorts are increasing their engagement. And overall, the engagement at the company is increasing. Now, that's been one of the fundamental reasons why I've been bullish on Uber stock is because of the incredible convenience advantage it adds to people's lives, whether you're looking at food delivery or mobility. Food delivery is something that I'm surprised with. The aftermath of the pandemic, I thought would present a situation where the food delivery business would fall because restaurants were open again and people could go dine in person. But what people have shown is they prefer to order and have the food delivered to their home. It's so much more convenient, and this convenience advantage is magnified if you live in a crowded city. The place we used to live was extremely crowded, and going to the local Chipotle to pick up a burrito could be 45 minutes to an hour and 15 minutes, and it was only 4 miles away from our house. Because of the traffic, the parking, and how crowded the actual restaurant was, waiting in line and all of that could take an hour, hour and 15 minutes. So ordering it for delivery and paying, if we ordered something and the order value was $40, we would pay maybe $7 in total delivery cost and then $3 or so, or everything included with the tip. you would pay maybe $10 to have that $40 order delivered to you, and you save yourself an hour of your time and all of the stress in dealing with a crowded city in trying to get to and retrieve your meal. And so it's incredibly convenient, and people have shown a willingness to pay that fee, whether it be $5 or $10 or $15, to avoid the stress and the inconvenience of having to go to the location to pick up your food. And with with rideshare, it's a similar advantage. The cost of car ownership is absolutely soaring. I saw data recently that showed the average purchase price of a new vehicle in the United States has exceeded $50,000. The average purchase price. And you're not buying, this isn't for luxury cars. This is just the average car, the purchase price. And then on top of that, you add the insurance cost, which is soaring, the cost of fuel, which is soaring. All of that, the cost of car ownership is incredibly increasing. And you can avoid that by just using Uber and other transportation services for your transportation needs. And this is especially more prevalent for the younger generation, especially if you don't have a family, and it just makes it so much more economic to use Uber, where your monthly cost will be lower than your monthly cost of car ownership. And then it'll be more convenient too, because you won't have to search for parking. You get dropped off at the place you want to get dropped off. You get picked up when you want to get picked up. You don't have to be, let's say you're going out in the evening and you're meeting friends for a drink. You don't have to worry about who's going to be the designated driver. You just take an Uber. And so all of those convenience advantages are resulting in a business that's thriving. And all the while, investors are downbeat on the company because of how great Tesla has been in marketing driverless car technology and putting fear into investors about companies like Uber by telling investors that they're going to grow and take every single market dollar that goes to driverless car technology. And they're telling investors they're going to be able to deliver ride shares at 20 cents per mile. And if you believe the numbers that Tesla forecasts, I would question your investing prudence, because that management team has consistently overpromised and underdelivered. They promised a $25,000 electric vehicle, and their lower priced model actually turned out to be $37,000. Okay. So if they're promising 20 cents per mile on rideshare, you can double that as a reasonable estimate at the lower end of what they'll actually be able to deliver, if they're actually able to deliver even that. So if they get this driverless car technology out broadly, right? I know they're going to get it out and they're going to get approval in a few cities. I don't know yet if they're going to be able to roll it out broadly in the way that they're expecting to, with the camera only approach and the lower cost approach. I'm thinking and I'm estimating, if they're telling investors 20 cents per mile, I'm thinking 40 cents per mile would be the reasonable low end of what they'll be able to provide. And then they're not going to be the only one, right? You've already got Waymo that's out in the United States in several cities and expanding in several cities, offering its driverless tech services. And Uber has partnered with several driverless tech companies. So even if Tesla eventually gets to that point, there's going to be other operators and other providers that Uber can partner with, including its own investments with companies like Lucid and Neuro and the cars they're bringing onto the market. And they'll still be able to capture a meaningful part of the market. So I think that's created an opportunity for investors here with Uber stock, is that the over expectation that's coming out of Tesla, and then that's creating downside effects, right? Trickle effects. So if you're believing that Tesla's going to achieve what they're saying they're going to be able to achieve, then you're thinking, well, that doesn't leave much room for Uber, and that would be correct. But the fallacy in that argument is believing what Tesla is forecasting, because they forecasted 25 different things, and nearly all the time they deliver way below what they forecasted. So as an investor, you have to make adjustments to the forecasts from a company that's in the habit of overpromising and under-delivering. And so I wanted to share with you my updated intrinsic value calculation for Uber. I believe these shares are worth $133 today, but you can go out in the market and buy them for $92. So for all these reasons, I still like Uber as the best stock to buy right now. Hey, thanks for watching. I truly respect every viewer who takes the time to seek qualified financial analysis. Unfortunately, there are a lot of unqualified voices online giving unsubstantiated stock advice. My goal is to provide research that's grounded in data and professional training, not just what's popular. For those new here, I hold a master's degree in financial economics. I'm a CFA charter holder, an author, an adjunct professor of finance and economics. I've spent nearly a decade researching stocks professionally, and I'm here to help you make informed investing decisions. If you found value in this analysis, make sure to subscribe and consider joining the channel as a member for early access and in-depth members-only content.